Lesson 6. Case Studies and Best Practices. Welcome back to the CoinsPaid Academy. In this session, we're going to walk through real examples of crypto adoption and turn the lessons learned by early adopters into practical insights for your business. Let's dive right in. Our first story comes from the digital advertising space, AdsKeeper, a global digital advertising agency. Their clients, mostly other businesses, wanted more flexibility in how they pay for premium services. Traditional payment methods felt too rigid, sometimes too slow, and didn't always match the pace of their clients' decision-making. AdsKeeper decided to integrate crypto payments via CoinsPaid. Clients who preferred to pay in digital assets suddenly had a smooth, reliable way to do so, and global partners could top up balances and buy services quickly, often in larger volumes. As a result, AdsKeeper saw their crypto transaction volume increase by about 30%, and more importantly, their overall revenue grew by roughly the same amount after adding crypto. The lesson from AdsKeeper is simple. When your customers are global or already comfortable with digital assets, crypto can be a genuine revenue driver. Now, let's move to another sector where crypto payments are gaining ground: private aviation. Meet Mirai Flights, an EU-based private jet charter company. They operate in more than 80 countries, and their world revolves around time and certainty. More than 1 in 5 of their bookings are for same-day or next-day departures. Payments are large and highly time-sensitive. They simply can't afford payment delays or failed card authorizations. What they needed was a payment setup that worked for any customer in any time zone, with low fees, instant settlement, and no banking delays. They also needed protection against chargebacks because in their business, a single dispute can be very expensive. By integrating crypto payments through CoinsPaid, Mirai Flights got exactly that. Revenue grew by nearly 1/3, while payment fees dropped by more than 75%. But impact went beyond percentages. They overcame a critical bottleneck. High-value payments could now be confirmed immediately, so jets could take off on schedule without the stress and uncertainty of traditional payments. Next, let's look at a company that doesn't just collect payments, but sends them out to people around the world: Transformify. Transformify provides workforce management and helps businesses hire and pay contractors in more than 180 countries. In their ecosystem, roughly 40% of contractors actually prefer to be paid in crypto. For them, the problem wasn't simply the feasibility of crypto payments, but rather the scale. They had to reconcile crypto flows with fiat accounting across all those countries, track real-time exchange rates, handle chargebacks where relevant, and avoid reporting mistakes that could turn into compliance issues. Doing all of this manually was becoming almost impossible. When Transformify adopted a proper crypto payment solution, they saw a major operational transformation. Chargeback handling time was cut in half. Errors dropped by about 80%, and financial reconciliation became roughly 70% faster. Now let's move to global payroll with Rise, a hybrid payroll platform. They support both traditional currencies and crypto. However, traditional cross-border payroll is usually slow and expensive. It can take 3 to 5 business days for funds to settle. Each transaction can cost $15 to $50, and on top of that, you often have 2 to 4% in hidden FX spreads and other charges. For a business running payroll across multiple countries, those numbers add up. Rise wanted to modernize this entire flow. To do that, they integrated USDC, a dollar-pegged stablecoin issued by Circle. USDC is designed to stay at a 1-to-1 value with the US dollar and is widely supported on multiple blockchains, which makes it suitable for large and frequent payments. With USDC in the mix, Rise processed more than $800 million in payroll volume on their platform. Around 60% of that volume ran through USDC. They were able to cut payment processing costs by about 40% and improve cross-border payment speed by roughly 95%. More than half of the contractors using the platform chose to be paid in stablecoins, and USDC represented the vast majority of those crypto payouts. Our final story in this section is about remittances. Meet Bisa Remit. They help migrant workers, especially workers from the Philippines, send money from countries like the UK and the US back home. But traditional remittance channels often come with high transfer fees, hidden FX markups, and multi-day settlement times. On top of that, services may not be available outside of banking hours. By integrating USDC via Circle, BC Remit was able to rethink the economics of remittances. The combined transfer and FX cost dropped to just over 1%. In some cases, this meant up to 90% lower fees than banks and legacy remittance providers. Overall, they recorded an 85% reduction in fees and cut processing times by 99%. And because the system runs on blockchain, they could operate around the clock, including weekends and holidays. There were additional benefits as well. BC Remit no longer needed large pre-funded accounts in destination countries, which reduced working capital requirements and interest costs. Now that we've walked through these stories, let's step back, look at the patterns, and explore what tends to work well and what tends to hold businesses back. The first thing that works is a compliance by design mindset. The most successful projects treat compliance as a built-in feature of their setup. That means the provider already supports things like travel rule, data sharing where required, sanction screening, AML checks, and clear KYC and KYB processes. When these pieces are handled by design, your risk and internal workload drop dramatically, and conversations with banks and regulators become much easier. The second success factor is a stablecoin-first approach, followed by carefully selected additional cryptocurrencies. The most effective setups start with stablecoins like USDC for predictable value, and then add major cryptocurrencies based on actual customer demand rather than hype. For merchants, combining a fiat to crypto bridge with a stablecoin-first strategy makes refunds, pricing, and accounting far simpler. The third thing that works is having clear, simple refund and dispute policies. One common mistake is to think, there are no chargebacks in crypto, so we don't need a refund policy. In reality, successful merchants do the opposite. They design transparent refund flows and explain them clearly to customers at checkout. Fourth, the companies that win treat crypto as a regular payment service. They integrate crypto payment APIs or SaaS platforms, automate mass payouts for payroll, affiliates, or contractors, and use dashboards for settlement, reconciliation, and reporting. So, if you run a business at scale and your operations team is still manually checking wallets and updating spreadsheets, chances are you've just added a new layer of friction. Finally, heavy use of fraud prevention automation makes a big difference. Crypto may reduce some fraud types like card chargebacks, but it does not magically eliminate risk. What works in practice is automated risk scoring, pattern-based fraud detection, sanctions and blacklist checks, and real-time transaction monitoring. Most modern providers embed these tools into their platforms. On the flip side, there are patterns that consistently do not work. Trying to do it all yourself is one of them. Spinning up your own wallets, writing custom code, and attempting to self-manage travel rule obligations, sanctions screening, security, and accounting often leads to security risks, compliance headaches, and huge maintenance overhead. Another trap is offering only highly volatile cryptocurrencies without stablecoins or straightforward fiat conversion. That approach typically leads to pricing confusion for customers and volatility in your profit and loss. And finally, ignoring back-office realities is a reliable way to stall adoption. If your finance team can't reconcile transactions or your auditors don't understand what's happening, things will stop very fast. That brings us to the end of this lesson. We've seen how companies across advertising, aviation, workforce management, payroll, and remittances are using crypto payments to grow revenue, cut fees, speed up payouts and settlements, and reduce operational errors and compliance risk. In Lesson 7, we'll look ahead and explore upcoming trends in crypto adoption, how payment technologies and regulations are evolving, and what your business should prepare for in the next 3 to 5 years to stay ahead of the curve. Thanks for watching, and I'll see you in the next lesson.